Are tech stocks overbought, or is now the time to jump onto the train that doesn't seem to stop moving? Gareth Soloway is here to break this down along with Bitcoin and the overall stock market. Gareth is the chief market strategist at InTheMoneyStocks.com and the president of Verified Investing Education. Gareth, always good to see you. Thanks for coming back. A lot to discuss today.
Yes, thank you for having me back. We do have a lot to discuss today, David.
Nvidia stock, let's start with that. So jumped 26% overnight last week on the earnings beat. It briefly surpassed $1 trillion in market cap, and it's now just below that. So, it's gone up a lot this year. I'll let you pull up a chart. It's gone up, I think, more than 100%. It's more than doubled since the beginning of, since 6 months ago, and since the beginning of the year, it was 140. So yeah, it's more than doubled, almost tripled, actually. Yeah. And now this stock it's reflective of the overall semiconductor industry, because like I mentioned to you offline, AMD is also up. Taiwan Semiconductor Manufacturing Company is also up. AMD is up like 50% year to date. Nuts. So let's talk about this trend. What happened here, and is it exclusive to this industry, or is it reflective of the broader market uptrend that we've seen?
So there's really two components, and the first component is the AI craze, right? So, any company in their conference call when they report earnings that mentions AI automatically gets a bid. It's kind of the hot thing to talk about right now. Now, if we recall, we saw the same thing happen many times historically, right? Going back to the beginning of my trading career, if you just added a .com to your name in 2000 or 1999, you instantly became $100 million, $1 billion company, right? It was just insanity because it was the advent of the internet. We've seen it happen with the marijuana stocks when they first came out. That was the hottest thing. The solar stocks, when they first came out, it was the hottest thing. So right now, this is the hot thing, and it's coming at the right time where there's a risk appetite, right? So we have a situation where we've seen Bitcoin rally almost 100% off the lows. We've seen the shit coins or the meme coins kind of rally off the lows with massive people just willing to gamble. And it basically tells you people are willing to take these risks again. So it feeds right into that thing of saying, hey, listen, has AI in the title. It's so sexy right now. Let's rip it to the upside. Let's buy it no matter the valuation.
No matter the valuation. And how do you feel about the valuation right now? I'm guessing you think it's overstretched?
Yeah, and there's no doubt about it, right? I mean, so if you just look at the metrics of it trading at the PE, the forward PE, even if they were to get what they're proclaiming they're going to get from AI in the next year, my guess is it's going to take 5 to 10 years to really build it out. But, the chart at this stage is in ludicrous land. The one thing to point out here is if we look at the chart, this candle right here, which occurred 3 days ago, that's called a topping tail. And again, when you have a topping tail where you have a tail on the top and a close in the lower portion, on a technical basis, that's a sell signal. As long as you do not close above the high, which was around 420, that again is a sell signal on the chart. So the chart is saying sell, the fundamentals are saying sell. Right now you have risk appetite, but my guess is that's going to fade when we start to see this economy slide more so into or towards a recession.
I do want to come back to the economy and your macro trades. But first, let's talk about this AI craze that you mentioned. Very important. So if you drill down a little bit deeper on Nvidia's earnings, so their revenues beat earnings expectations, or analyst expectations rather. The expectation was $6.5 billion for the last quarter. Revenue came in at $7.2 billion. Now the gaming revenue, so from the gaming division, was down 38%, but like we mentioned, AI, thanks to AI, their data center segment rose 14%. Due to demand from AI. And I think the question is now whether or not this trend of AI demand for semiconductors it's going to continue, but the pace of growth, is that going to continue? And whether or not, if you were placing a bet, would you be betting that it'll beat analyst expectations again next quarter because of this trend?
So in general, I would say they'll probably come in at or just slightly above expectations. But my guess is based on current valuation, the market's already pricing that in. And again, the market does a great job of pricing in what it expects, not what the CEO says, for instance. So the hype that's being built here, I think, again, it's based on the fact that you have a soft landing expected by many investors as well as economists. I don't foresee that. And I think you will see a glut of chips. I also think we have to recognize that there's a ton of semiconductor companies out there. I mean, it's not like you just have one, two, or three. I mean, you literally have probably 50 to 100 semiconductors out there that are all going to be pouncing on this AI craze. And so, sure, in the near term, it's great. But what happened to the solar industry? And I know you know this, David, is that all these solar companies overproduced. Then China kind of flooded the market, and it drove prices down. What happened in the marijuana industry? Marijuana companies overproduced, prices collapsed. So short term, yes, it's a great story. But for me, I'm on the side that, again, overproduction based on chasing this revenue will ultimately lead to lower prices and lower stock prices as well.
I remember one or 2 years ago during the pandemic, it was almost impossible to buy a new car where I was from. Up in Canada, because there were chip shortages everywhere, and so the used cars were actually getting bid up, and the new cars there weren't any available in inventory. And so I think a lot of this has to do with demand for chips in cars being pulled forward as well. And as that stabilizes, perhaps the demand will stabilize as well, and the production of chips will stabilize. And so maybe this growth we're seeing right now is a reflection of everything that needed to happen during the supply crunch. So.
Yeah,
perhaps
I also think that it's a lot to do with human psychology, right? I mean, everyone is just so insane about the AI craze that it makes them willing to pay up, much like people were paying up at 65 or 69,000 for Bitcoin because it had become such a cult thing to do. That's emotion. I don't trade on emotion. I trade on charts, reality, logic, all those fun things. And so that's where you have to step back as an investor, because investors that trade on emotion ultimately end up losing.
Let's take a look at the chart then of Nvidia, and we can move on to some other stocks as examples. But let's take a look at this one first. If you were just to look at the chart, how overstretched is it right now based on the technicals?
Yeah, so based on the technicals, it's in what we would consider the stratosphere, almost unparalleled in terms of history for such a large company. Now, you can have small mid-cap companies where they're much tinier, have great news, and they'll have these meteoric runs. But just to show you some cool technicals here, take a look at this, right? If we use a parallel and we do a parallel line down here, and we kind of do it in this lower range, look at what happens when we raise it up here, right? So you basically, if you go back to 2019, the lows on Nvidia connected to the lows that we had in early 20 or late 2022, and you connect that to the high here, you basically are at the upper band of a channel, which again signals resistance. You tap into the daily chart with the topping tail as well. Again, doesn't guarantee it's topped, but for my world, it's all about probabilities. I want to be the casino. I don't want to be the gambler. And in this case, the casino is the higher reward, or the higher success rate would be to the downside here.
And this speaks broadly to the tech industry as well. If we take a look at the Apple chart, we were talking about Apple offline. Can we take a look at the Apple chart and whether or not that tells a similar story?
Yeah, it does to some extent. Now, Apple, again, is about 3 times the size of Nvidia, but same kind of thing going on here where you've had this multiple months of expansion in terms of market cap. You look at all these green weekly, these are actually monthly candles. So 1, 2, 3, 4, 5, 6. You're on your 6th month straight of gains in Apple. If you look historically at the chart, here you could see a nice one, 1, 2, 3, 4, 5, and then it had a pullback. So again, betting odds are going to favor that this is due for a pullback, especially as you come into what we as technicians call a double top right here. And also, again, if you think forward and say, okay, is this market potentially headed for a recession? Is the economy headed for a recession? The Fed has even said it's going to be mild. I always say when they say something, it's always going to be a little bit worse than they say, like the transitory, and we know what happened with that in terms of inflation. So for me, this is, again, the odds are Apple probably pulls back off this level. Now, let me just show you this because I think this is really important to kind of key into. I want to show you a chart on this. This is a chart of the psychology of a market. Okay, and what you see down here, and I hope everyone can see this, but this is the disbelief, this is the panic. It goes into hope, optimism, belief, thrill, euphoria. You then have the big pullback after euphoria. Remember, euphoria is where markets top. Think about crypto in 2021. Think about the stock market in 2021. You get the pullback, and then what happens in the chart after that? You get a move to the sideways up. And look at that. Now, so remember this period right here. All right, remember this drop, the bounce, and sideways upward movement. Now, what I want to do is I want to flip over to the NASDAQ. All right, this is the NASDAQ going back to 2000. All right. And again, the reason you'll see why I'm bringing this up, you have the sharp move up of euphoria, the sharp decline, and then look at that pattern right there. It matches the psychology of the market chart almost to a T. Now let's flip forward and say, okay, well, what do we have right now? Well, look at this. Here's your euphoria move, your pullback, and your sideways to slightly up consolidation. So to me, this chart is mirroring the 2000 chart in the NASDAQ. It's also putting us in a position where it's repeating. And again, emotion, we know humans are driven by greed and fear. So it makes sense that charts that are bought and sold by investors driven by emotion are going to ultimately repeat. And that's what we see here in the chart. To me, this is a bearish consolidation. This is the complacency in the market taking hold before the next big dump. And I'm fully in the case. In fact, I'm more bearish now than I even was a month ago on the stock market in the second half of the year.
Okay, so this is important to bring up. So you're bearish on the stock market overall. And I think people look at the stock market overall and say, wow, the S&P's gone up, the Dow Jones has gone up. But pull up this chart for me, please, Gareth. It's called the SPXT, so SPXT, ProShares SP 500 X Technology ETF. And if you strip away the tech stocks, this ETF is a good index, a good proxy for that. If you strip away the big tech stocks from the S&P, what you get is just flat.
Yep.
Yeah, over the last year.
And that's what's so important for investors to understand is right now it looks like, hey, the stock market's doing great. The NASDAQ's doing great. But if you literally take out Google, Amazon, Microsoft, Apple, Nvidia, you take these out and you're going to literally see a market that is going sideways that's barely holding on. And I think this is a great point you're making, David, is that people have to understand that under the surface, right now, it's a very pretty pig with lots of makeup on, but under the surface, there is a real struggle for companies out there in the economy.
So I guess the thesis here, the play here is just to bet on tech stocks because, like you said, huge influence on this index overall. You're either short or you're long on the tech stocks. That right. determines the overall index. So
to be fair, I'm short tech right here. I mean, there's to me, this is lunacy. Doesn't mean it can't go higher. That's why I never put all in on the first buy. I kind of inch in, but I am going long on beaten down plays. And this is where the contrarian mind thinks, right? It's when you analyze human psychology and you recognize people buying Bitcoin at 69,000, not because they believed in it, but because it was the thing to do. It was the hyped up thing. You're now at that stage with these semiconductors. You're at these stages with Apple and Microsoft, where again, the fundamentals don't align. It's just kind of people jumping over each other because they think it's easy money to make. And so for me, when I go to some of these charts, I want to show you guys this. This is really cool stuff. So I bring up charts and I say, all right, well, you know what? I'm not a follower. I'm a leader, right? And being a leader in investing is important. Well, if we look at this chart on 3M, you have a chart of 3M. Look at this going back to the levels here. So 3M has been in a steep downtrend, and we all know this company's not going away. In fact, in a recession, it probably holds up one of the best. So you look at that, and then you go back, look at the support lines going back to 2007 and 2011, and even right here in 2012. That is amazing technical support. Now, again, by no means does this guarantee it's going to be a profitable trade. But again, my job is to put myself and everyone that follows me in a position where the probabilities are for an upside or a profitable trade. And right here, I would much rather be in a good name that is trading at a low valuation that's into technical support versus going and jumping on Nvidia at these crazy levels.
Yeah, I mean, that's an important, can we just comment on the markets or the trading psychology one more time? Because you said something very key. You said it could go higher, the tech stocks could go higher, but I'm still going to be short because the valuations are just insane. And so what that implies is that you're not chasing momentum. Why aren't you chasing momentum? Why wouldn't you want to chase, let's say a bunch of people rush in and buy the stock some more, and you know they're just going to drive the insanity up even higher. Why wouldn't you want to be a part of that?
So when people chase, it's emotionally driven, right? And again, emotion ultimately gets us in trouble, whether it's in trading, investing, or in our lives in general, right? So the key is you have to look at it and say to yourself, what is the long-term value here? What is the reality of the situation? And when you're chasing, what you're hoping is it's the better fools, or whatever they say, the bigger fool model, right? Where you're hoping that someone else will pay higher, even though there's no valuation that makes sense, just because essentially you want to get rid of it after you jump in at a high level already. So for me, I don't want to be that. I don't want to be in that game. Why play that game when, again, it's an odds base? It's basically like going to the casino and playing a hand of blackjack. I want the odds in my favor. The way I get the odds in my favor is simply by finding good charts, discounted quality names into technical levels. I'm glad to be in these safer names. I don't need the adrenaline rush in my life anymore of maybe I make a lot of money overnight. No, slow and steady. And I've done this, and I'll tell everyone out this. In my early career, I was just like everyone else. Put all your money in, try to double it overnight. And you know what? I blew up my account countless times. So now I've found that if I do the right thing and just stay slow and steady, it really does win the race.
Okay, I'm going to talk about the economy. You brought up a recession. So yeah, you're right. The Fed staff projected a mild recession by the end of the year. They said that not in the last meeting minutes, but the one before that. And Jerome Powell, Fed chairman, at his last press conference about a couple weeks ago, he actually rejected that outlook. He said, I don't agree with the Fed staff's projection, his own Fed staff's projections. In fact, he said, it's not my view or the view of all the other governors. So Jerome Powell is doing battle with his own staff. I'm guessing you agree with the staff more than Powell. That's my guess.
Yeah. And again, this comes down to common sense is that, if you're going to raise interest rates from essentially 0 to 5.25%, in a very short amount of time, keep in mind, we're talking a little over a year plus at this stage, there's going to be repercussions. We've already seen it in the banks, right? And now what do we know that's happened to the banks? The banks have tightened their lending practices even more, which almost works like an additional rate hike or two. And so you have these situations where if everything was going to be fine, I don't think you'd see banks blowing up left and right. Think about the commercial real estate and what they're saying later this year that's going to be. I mean, that's something that no one on TV is really talking about, but that is something that investors need to pay attention to because it's going to put more stress on the financial system. Now, I'm not necessarily proclaiming that we're headed towards a depression in the near term. I don't think we are, but I do think that elevated inflation will remain. And it's going to keep the Fed on the sidelines, and the markets are banking. They're banking that if we do have a recession, the Fed will come save the day. And I think that time is past unless inflation gets back below 2%.
Okay. Just on the note on commercial real estate. So if you take a look at some of the REITs or the commercial real estate ETF, I just pulled something up. EWRE, for example, it's already gone down a lot. Is this a moment to get in right now? Because it's been declining for quite some time since the last year. Peaked around late December.
Yeah, so what's the symbol on that one? Let me pull it up.
EWRE. It's the Invesco S&P 500 equal rate. Yeah. Real estate ETF.
Absolutely. All right, so let's take a look at this chart and see what the chart says, because I think this is an interesting factor here. So for me, and again, what's interesting is you've had the drop in this. The difference is if you look at the tech stocks again, by the way, this chart is very similar to the NASDAQ chart. The only difference is it hasn't gotten the recent boost in tech because of tech names. Now, very simply put, to me, this is a bearish chart pattern. You have a clear trend line right under here. You have a clear kind of wedge pattern right here. And ultimately, if this level breaks, and what's interesting about this is that this is setting up where it could break in the next few days or the next week. And if that happens, then watch out below, because to me, this is bearish consolidation off of this down move. And the next leg down takes us probably to 25 on the EWRE.
Okay, so still some short-term downside. But let's talk about Bitcoin now. So last time we spoke, you mentioned to me that you would not be long until it's sustained above $30,000, and you were right, it hasn't, and so it didn't break out with $26,000 now, $27,000, and this is interesting because the NASDAQ, like we mentioned, continues to grind higher. We've got the big tech stock companies, like we talked about, just going to the stratosphere, and yet Bitcoin over the last 3 months has been more or less flat. That's a divergence from the NASDAQ. That's an interesting pattern. Yes, let's talk about that.
So you're 100% right. And in fact, that's a glaring red blinking light for us in crypto. And let me just put this in perspective. If you go back to 2021, Nvidia was up 200%. Bitcoin went from, basically 20,000 to 65, 69,000, right? Same thing with other ones, AMD or a Microsoft or all of these, they were all running together. So it was a very clear risk on trade. You are not seeing that this time in Bitcoin. And what that means to me is, so I think there's a big disconnect with actually what investors want Bitcoin to be. Is it a risk asset? Well, sometimes, like we've seen, it goes up with tech, or sometimes it goes down when tech, for instance, today, right? Today, Bitcoin is down, tech is up. On the other side, we saw a few times where the banks were collapsing and Bitcoin went up. So is it a safety asset or is it a risk asset? Which one is it? And investors can't decide. And when investors can't decide, that is not a healthy place to be in the market. So again, the biggest thing to me is this chart continues to hold underneath 30,500. You've got bearish consolidation starting on this chart. We break this 25,900 level. You're going to get a leg down probably to about 24 to 23,000, which is your next support. And I will say this is that the hype when we were at 30,500, people were going nuts. I even commented, I think to you in one of our interviews, that it was reminiscent of the hype that was at 69,000, the same sort of buzz. And to me, that was a negative divergence, because if you're at this lower price and you have that same level of hype, and we know what happened there, it's likely going to repeat here. And I still am in the camp that I don't necessarily believe the lows are in on Bitcoin just yet.
One interesting sentiment I've gotten from somebody I talked to is he said Bitcoin is already so high. I think that were his words. And I said, what do you mean it's already so high? Like, what are you based on? Like, relative to what? He says, relative to earlier last year. And I said, well, that's an interesting way to look at it. I mean, yes, it was at 17,000 and now it's at 26. He said, yeah, this huge rally, Bitcoin price is already really high. It's going to go higher. And I don't know if there's any logic to that in a sense, yes, if
there's
you compare it to the trough. Okay, all right.
No logic at all. I mean, listen, people, there's nothing more that has a bigger cult following than crypto. And I love crypto long-term. I love specifically Bitcoin long-term. I really do think it will mature into the digital gold. I plan on holding a ton of it at the right time. But that doesn't mean, again, if you look at 2017, when we topped out there, we pulled back in that bear cycle to 3,500. And then we went back to 10,000, which was basically a triple. And then we went back and retested the lows. So, I mean, you can't say, well, it tripled back then off the lows and retested. But in this case, it's up 100%, but it's not going to go back. The logic just isn't there in that situation. Tell
us something. Okay, so you don't like the tech stocks. You're short the tech. There's near-term downside on Bitcoin. Can we comment on things you do like besides 3M, which you mentioned is probably a good value play right now?
Absolutely. So what I'm looking for, again, and this is me being defensive. Obviously, I'm net bearish on the market, so I want to be very careful. But ultimately, 3M is just one of the names that's been beaten down in this scenario. You also have, and I'm just looking at my list over here of other names here that have been beaten down. Like something that I'm looking for at least a short-term bounce on, Target. Target has had a big move down here. It's now getting into some major support. This was a former trend line. We can lower that one down to this level. I'll show you guys this level right here, right on these highs, and we're coming right into that. So again, for me, it's looking at these defensive names. Other ones would be Amgen. I think Amgen again is another one that's been sold. And by the way, what you see in the markets in general, and look at the move down on Amgen. I mean, this has just been ever since the tech stocks caught fire. Money has rotated from the safety plays into tech, into Nvidia, into Microsoft, into Meta, et cetera. So what I'm looking for is I'm looking for a reversion to the mean trade here, where it's not like I'm in love with Amgen for the next 10 years, but for the short term, we should see some sort of bounce back up. And again, to me, I would be short big cap tech, long these defensive names like an Amgen, a 3M, and there's a few others that I'm trying to just remember which ones I like overall. Oh, by the way, one other one, PayPal. I think PayPal is really intriguing to me down here. PayPal, it is getting a little bit of a bid today, the last few days, but look at this chart. If I zoom out on this chart, again, way at the lows. We haven't seen these lows since 2017 on PayPal, and it's still printing money. I mean, basically, it's trading at a forward PE of like 10, 11. Now compare that to something like Microsoft, 30 PE, Apple, 30 PE forward PEs. To me, it's rotating the money where the cheapest is because you need to be defensive. Anyone who's not being defensive is opening the door to catastrophic financial loss if we do get a black swan, if we do get a recession that's worse than the Fed has said, and they don't come to the rescue.
Somebody might say, well, Gareth, by being defensive, we're missing out on the upside if there is one. Like it's and how would you respond? I mean, the 1% chance of a black swan wipes out your portfolio. There's a 10% chance of things going up from here.
Right.
Which probability would you take?
What I do is I look at the VIX, right? The VIX myself is where I gauge it, which tells me how much fear is in the market. And what we can see is the VIX is now below 16. Anytime the VIX historically has gotten down in this range, you've had these pops in the VIX. And when the VIX pops, it tells you the markets are usually collapsing. And so for me, when we get down in these levels, it's just almost second nature to be defensive. I want to be defensive in these periods because people are not expecting anything. They're thinking everything is going to be perfect. There's a smooth sailing for here on out. And inevitably, that's when the markets historically have had problems. And the VIX is the best way to view that. Really, to be honest, anything even south of 20 can give you a little bit of a reason to start to short the markets, the big cap tech, and buy defensive names. But I usually wait for 17, 16 on the VIX.
I'm just curious because you've had a lot of experience, which you share on your verified investing course. You've had a lot of successes. You've also had a lot of failures early in your career. I wonder if the young Gareth Soloway would be trading like you are today, meaning you're being defensive on these indicators. Because what I've noticed is that a lot of new traders, they don't think that way. And when they see momentum going up, they just go all in. It takes someone who's been burned before to actually consider the downside consequences.
Yes, you're 100% right. It's actually a rewiring of your brain. Just like, if you're a kid and you touch the hot stove, you're going to learn very, very quickly, probably faster than I learned in terms of trading, that method usually ends up with losses. Sure, you might make it big on one trade or two trades, but it's ultimately going to lead to the downside. So for me, at least, that's exactly what it is. And my younger self would have been chasing Nvidia, would have been chasing all these other things out there, trying to catch lightning in a bottle. And that rewiring, when I get in a trade, so when I was a newbie, my mentality was always like, how much money can I make? Now, when I get in a trade, it's how much money can I not lose being defensive? And then the gains in the market or the gains in portfolio are a bonus, right? And it's a big change in psychology of the brain, but it creates the stability and the long-term growth that actually makes you into millionaires. Most people think they got to play Dogecoin to become a millionaire. You just have to be consistent year after year, smart money investing using the technicals.
Reminds me of Warren Buffett's 2 rules of investing. You know what they are? Rule number 1, don't lose money. Rule number 2, don't forget rule number 1.
That sums it up beautifully.
All right, I want to close off on this point. So how do you feel about fixed income and bonds? And how do you feel about the Federal Reserve and the rate hikes? So can we first get your outlook on monetary policy? How many rate hikes do you think are left, or do you think they're done, and how that's going to impact bonds?
Yeah, so before last week, I was in the camp that they were on pause, and then we saw the Fed funds rate spike to 66%, banking in another rate hike. But I believe the latest is that it's come down to like 30% or so, which means the Fed likely won't be hiking, right? So the Fed, I think, is very aware of the struggles in the banks, which, by the way, investors are ignoring. If the Fed is being this cautionary with the inflation numbers that we've seen come out recently that have shown that we do have elevated inflation sticking around, and they're still not wanting to hike, to me, that probably tells us there's more stress in the financial system than we're being led to believe. So for me, again, it seems like they're on pause here. They say they might hike later in the year. I think that's just a fallacy to basically keep the markets from just going nuts to the upside and becoming another bubble. But I ultimately think they probably are concerned. They're looking at the tech stocks, what's going on there. They're looking at other things. They're looking at stress in the banking system. And I think they have a lot of problems on their hands, frankly. I do not envy them one bit. I would not trade places for $1 million billion.
Would you, final question, I'll let you go. Would you agree with the statement that the Federal Reserve has 3 mandates, the third being the stock market, keeping markets afloat?
Yeah, I think that was a mandate that subconsciously or consciously they thought about a long time ago. But I think what we've seen with inflation, there's been this changeover where they start to realize that the inflation is a bigger hardship for people that can't afford it, meaning that if you're lower or middle income and you don't have a lot of investments, then inflation is a killer to you. So I think there's been a little bit of subconscious or maybe conscious change in how they're doing policy, where they're not as worried about the stock market, assuming it doesn't go into free fall. Like when the markets were down 20, 30% last year, I don't think they worried about that. If we went down 50, yes, now you're talking about a cataclysmic issue that they would be concerned about. But I don't think it's the same mentality as it was years ago. I think they had this mentality that it was a trickle-down economics or trickle-down investing. The richer got rich with investments. They would eventually feed down the slide. I think that thinking has changed. Whether it's part political with the new administration, I don't know, but I certainly think it has changed.
Excellent. And where can we learn more from your trading styles and philosophies and experiences? You've got verified investing education. You also have a great media channel now. You've got people
That's
should check out
right.
your Instagram if they
That's
haven't
right.
already. Yeah.
Oh man, yep. It's been amazing. My game plan is a free show that's on Wednesday mornings 9 a.m. We game plan the whole market setups, trading setups in crypto and stocks, commodities, and then really in the money stocks is where I do my stock trading. Verified Investing is the parent company or the parent website now, verifiedinvesting.com for my education as well as my crypto there. So I encourage people to check it out. Come learn how to not make all the mistakes I did. You'll get rich a lot faster than I did.
What was that saying? The wise man learns from other people's mistakes. You see, the thing is, people learn, they still make those mistakes. But anyway, that's a discussion for another time.
Hopefully just fewer times than me. I made it 100 times.
Well, I appreciate your service, and I appreciate you spending the time with us. Thank you very much.
Thank you so much, David. You are awesome as always, buddy, and I look forward to our next chat.
Yeah, looking forward as always, and thank you for watching. Don't forget to subscribe.